Let's bring in an old friend, Craig Columbus, with Advanced Equities Asset Management in Phoenix. He's also now chair of the Department of Entrepreneurship at Grove City College, and we have been through many incarnations together, my friend. Happy Thanksgiving to you and your family.
Same to you. Well, you really win an upstaged Oprah, Bill, with this sabbatical.
Yes, indeed he did.
Let her have the cover of People magazine. I'm happy to just slip away. This market and this climate, do you believe that the stock market is an accurate reflection of what's going on in the economy right now?
In some ways, yes, Bill, because the Fed has green-lighted risk assets, no question. But what I think is not being reflected is that we've got to get private sector job growth, or we're going for tax receipts, or we're going to run deficits as far as the eye can see. And what concerns me, with so much negative equity in the housing market, it inhibits people from getting mobility for the job market, and it inhibits them from getting their additional training, right? So you create a structural unemployment problem, and I have a lot of concerns about that. Think about the three biggest things that dragged us down. Credit, and credit spreads have come in dramatically since December, right? High yield had its best month ever last month, right? Housing, existing home sales, new home sales looked like it bottomed in January, and financials. Now, I think Saturday Night Live said it right when they said the stress test was essentially pass and pass with an asterisk, but the market has absorbed new supply and absorbed non-FDIC bank debt. So on all three fronts, that's constructive. But I think the real key is what Steve just said, is that when you talk about ring fencing, you run the risk of moral hazard because people don't actually recognize the loss. It's time to come clean. Well, let's not forget, right, the path to economic good has to stop at a place called less bad first. He is a brilliant economist, but at the end of the day, I'm no fan of interventionist government, but even he would admit with ECB, Fed, Japan, all at zero, there is some knock-on effect to the real economy. True. I think stocks lead economic recovery by a median of 4 months. It looks like we triple bottomed in March, and this rally simply reflects improvement in the real economy, Bill. I think the Fed wanted the appearance of some inflation to remove the threat of deflation. Now, the interesting thing is going to have to watch these commodity-based indicators very, very closely. And while I don't think it's time to take the punch bowl away, I think it's very close in the not-too-distant future to giving the liquidity last call and not overstaying here. And if the Fed can thread that needle, then I think we're going to be okay. Is Russia too politically risky for you? Is Russia a market that you just don't know what the politicians are going to do, whether they're going to seize assets, or is that just not somewhere you want to go, or is that still a good deal? 100% yes. Too risky for me. I agree. I think this is the pause that refreshes, which is healthy. Now, we need financials and transports not to leave the party too early like we've done in the 4 prior oversold rallies. Out of those groups, I definitely think, Bill, that you could have some mean reversion bounce. But cash flow is king here. So those businesses that can fund themselves through internal operations and that pay a good dividend, I think those are the best. So balance sheets everything right now. Absolutely. Okay. Well, there's a little shudder today going on because the market is trying to figure out what does it mean to be up the capital structure as a bondholder and bailout nation. There's no way to say that's not speculating on an uncertain future. I mean, look, I know of no bankruptcy of this size that could be done surgically in 30 to 60 days. I found that completely disingenuous. Give them some credit. They did outlay a plan with specifics yesterday on stress testing. We wanted specifics. They gave it to us. That's at least a start. But what to Dennis's point is, we haven't had a marginal tax increase since 1993. That's a large footprint change that we just can't throw up our hands and be like, hey, that's just, status quo. 1938, we retraced 50% off the bottom. 1974, we retraced 70% off the bottom. A 50% retracement will get you to 1,100 on the S&P 500.
All right, I got to get out of here, Tris. You guys are terrific, by the way.
But the internals of this rally have been very strong. We all know that the gas prices rise like a rocket and fall like a balloon. That's going to put more purchasing power back in the consumer's pocket. And I'm with Jack because let's call it 81, 82, 73, 74, those are periods of high inflation, which makes stocks less attractive relative to bonds. Corporate bonds, boring, dividend-paying stocks. You've got a lot of multiples.
As long as they're paying dividends.
Yes, so non-financials, right?
This is a good idea.
I think it's an unimaginative, ill-timed approach that looks like New Deal in a bottle that will cause capital creators to hesitate, and when they hesitate, it arrests growth. And I think it's absolutely a bad idea at the wrong time. We are learning our way of what politicized banking is all about. I'd like to see them lay out a plan to our lenders for how we're going to responsibly fund these deficits. In other words, issue long-term debt. And the third thing I'd like to see is come up with a TARP balance sheet and income statement. Let's get a TARP accounting. Those three things, I think the market will respond very favorably. 70% discounting is the new 50% discounting. So I think that holds us back a little, but I still think we're going to get a positive Q3 GDP print, which lets us move higher from here. We're really down to three things. You can either ring fence these assets and backstop them. You can either do a bad bank and buy them off their balance sheet, maybe have to overpay for them, or you can do like the RTC, you can bridge bank them and you can basically say the government owns the bank and it'll sell it back into the marketplace later. That's where we are, those three choices.
Guest with you to the studio today, and there's a reason for that, right?
Yes, my son Peyton is here with me today, Bill, and I said, this is the consummate newsman, right, in the most honorable tradition. I said, this is somebody for you to really admire, and I'm so glad he could be with me here today. So.
That's very kind, my friend. Thank you.
I will look forward to our reunion show together.
I do too. Hopefully that happens in the next year or so. Thank you, Craig, and my best to Peyton and your whole family.
Thank you.
Okay,
Happy Thanksgiving.
he succeeded in doing it.